What is up, everybody? Welcome to another Monday market update. My name is Sean Grapevine. I am the director of Agent Direct here at UMortgage, and I've missed the last 2 weeks, and that means I've missed you guys. So thanks for having me back and accepting me back into your offices and homes this morning. I am joined this week, as with most weeks, by the Baron of Bips, the Sultan of SLAs, the Lord of the Locks, the man whose GPA at the University of Texas was even higher than today's 10-year T-note. I don't know. I don't even know if that's possible. I can't even make that joke. It's not possible. We'll have to rework that joke in a workshop here shortly. But without further ado, I would like to welcome Austin Koenig. Austin, good morning. How are you?
Doing great. And yeah, that GPA thing, we're going to need some good rhetoric, some good data to get that to be a more accurate statement. We got a lot of bips to go. Let's just say that necessarily. So
a lot of GPA bips to go, or 10 years.
Yeah.
Let's dive right in. You and I haven't chatted in a couple weeks, and it means I'm painfully behind. I am behind the eight ball. Just watching the data come across my screen after the fact. No way to digest it. And it looks like we've had a bunch of average news that has resulted in some outsized movements in the fixed year markets or fixed income markets, and a lot of clutching at pearls and nervousness in the market. So tell us about what happened last week and why it happened, how it happened, and where it put us.
Yeah. So really last week, it really got kicked off. I mean, let's just get it out there first. It's a weird week. Last week was, it's a short, random week with a half day to start on Monday, Tuesday's a close day, and on a Thursday you get the ADP jobs number, which really blew expectations out of the water in terms of that number. And keep in mind, this is not the banner jobs report that everyone pays attention to on Friday morning, which is the non-farm payrolls. But this is a good secondary indicator and a kind of a precursor to this jobs report that we always talk about. And it was really, really hot. Jobless claims also didn't help. It saw some good numbers there in terms of the economy side, but if you're looking to try to get monetary easing and monetary policy kind of not be more hikes, not exactly great, right? So jobs report came in a little bit above expectations. No craziness with that number necessarily, but it was no signs of weakness quite yet in the labor market. Unemployment was fairly consistent. It's just not really seeing the weakness that the Fed maybe wants to see in the labor market, which is a battle they've been trying to tackle for a while. And we also have kind of the other big banner data piece, which is inflation coming up this week. We've seen the 10-year, like you mentioned, go above 4, and it's hanging around above 4 right now. What's going to drive it back down to that range we're kind of hanging at? I'm not really for sure, to be honest with you. We have quite a big inversion on the 2 to 10, and we've talked about that a little bit in the previous weeks. But at the same time, a lot of people are not expecting many cuts this year. Probably a lot of people are now kind of pricing in no cuts and 2 more hikes, just with the Fed rhetoric and the data the way it's been coming out. So inflation's a big one this week, but that's kind of the catch you up. Weird, slow week, but data did not help in terms of driving rates lower. We have another big data dump this week on Wednesday and Thursday, really, that's going to help paint a better picture for the Fed meeting at the end of July.
Interesting. So tell us about the data we've got coming in this week. Obviously CPI, which I'd like to come back to here in a bit, and what else do we have?
So we have CPI. We have core inflation as well, and that's really, I think, the number that's the one that's going to be most closely paid attention to because I think CPI is expected to come down to the lower threes for this month, and that's consensus. If it beats consensus, great. That's good. If it doesn't, not good. Core is the thing that is been the stickiest part. We're at 5.3 last time we saw a print. We're expecting to try to get down to five flat. Like, can we get below that? Just kind of what parts of the core inflation are still running hot, what's starting to correct in the data. That's going to be kind of I think the curiosity behind that release and, what the market will react to. But we have a lot of Fed speakers this week. We have a meeting at the end of July 26th is, I think, the date we get the new rate hike or pause. What announcement comes on that, is probably a hike. That's what people are pricing in. But with that being said, we have a lot of Fed speakers this week, and we, get more color in terms of how they look at things, as well as this data is a big dump this week to kind of help propel what the rhetoric is right before we go into kind of that Fed silence period before they actually go and meet.
Sure.
So a lot of things to find out.
Yeah, interesting. So what is the expectation as far as core from economists?
5%. It was 5.3 last time. So we're seeing improvement, right? But 5%, Jerome Powell tell you straight up that that's not enough to start cutting.
I know. I asked him this weekend. I was like, Jay, money printer go, brrr, and he was like, no, money printer no go. Brrr. So he told me, and I was like, I liked it when it went brr, and he was like, yeah, same. He was a king. So we got inflation, and do you see, right now it seems like markets are sort of coming to terms with the fact that, like you said, no, it's not going to be any floating down the Fed funds rate. If anything, it's gonna go up a couple more times. And the 10-year being at 4 seems to be a more realistic point of view for the market long term. I think, back when we were joking about it being stuck range bound at about 3.5, it seems like it priced in some uncertainty about like, hey, maybe we're near the end. Do you think that like there's even more upside? Do you think rates are going to continue to go up? Is this or like are 2 rate hikes and no rate lowerings, is that priced in right now?
I think that's probably the most accurate picture that's priced in at this point. And I think the market was, getting a little too eager in the way it was pricing in a rate hike, like only maybe one more rate hike and the rate cuts possibly. We got an updated dot plot in the last Fed meeting. They kind of suggested that was not going to happen. And I think, the data that's come from, the time as well, and just the continued Fed rhetoric, it's kind of confirmed that dot plot is what the market should price to a little bit more. And I think the market has adjusted. But that's not to say, one thing comes out and the market gets overeager again, or, maybe goes the opposite way. I just think that we're kind of close to probably accurate necessarily, but it's just a matter of, really what's to come, and, how people are asked to position themselves at a different bet that they're, willing to, put their money on, right? So I can't say for sure where we're going to go. I think we're fairly priced in for, those 2 more hikes and kind of pause through the end of the year. But with that being said, things can always change. And right now, I could see it going higher. The rates can go higher. I can also see some good data prints push a little bit lower, and maybe only people start getting excited about only one more hike. Pretty quickly off of one print or something like that. So, there's a lot of external factors.
So what are we seeing quickly? What are we seeing in the MBS market? I mean, are we running into liquidity issues and pain at the upper echelons of the coupons like we were back in August, September, October last year? Has that has it had time to sort of sort itself out since then, or are we kind of right back where we started 6 months ago?
Yeah, premium's still the issue, right? At the end of the day, like we have, kind of like a lot of time with the rate stacks, you'll see at your conventional, rate stack is 7.625. and that new security hasn't really opened up yet. You kind of need Fannie and Freddie to start trying to get inventory at those, those higher rates like the 8.125 and all that good stuff. That's just not come about yet, and that's just not a liquid area in terms of like MBS trading and the amount of production. But what I will say is that premium does kind of evaporate a little bit. We're seeing a little bit of a recovery today, but MBS is not exactly overperformed by any means recently. Especially with the kind of rate volatility we saw last week. Some tough days out there nonetheless last week, but today we have a little bit of a recovery. Let's see if we can kind of keep things a little bit consistent. But yeah, still we have like the 5.5 and the 6, probably the most liquid coupons. Even 6.5 is not as liquid as I think people would like to see an even higher coupon like a 7, for example. That's just like ancient, never hasn't been produced in a while, and or traded.
But I mean, it's at some point, these investors and Fannie are I mean, the prepay risk is getting lower and lower every day. I mean, at some point they're just gonna like come to the realization that this is what, I mean, I said this back last August, so obviously nobody's listening to me about it, but they're gonna get used to the fact that this is just where we're gonna live for the next couple of years.
You keep on preaching to them. I mean, at the end of the day, like the thing is there's the parts of the valuation that are MSR as well, and MBS is not a perfect product where you go up 0.5% in rate, or you go up 0.5% in coupon and it gets you the same amount of yield. That's kind of the beauty of the product is it is not a linear relationship. If it was linear and easy to do, everyone would be able to price MBS, but it's just not the way it works. And that's the beauty of the product too. The borrowers have the optionality to call their bond necessarily every single month. It's a beautiful product in that sense, which makes it so interesting. But at the same time, those behaviors flow into pricing, and there's not much juice you can squeeze out from going from 7.625 to 8.125, in premium, unfortunately. So it's at the end of the day, we've been preaching on it so much, but it's the open up the rate stack situation. When we go up in rates like this, the MSR valuations get more valuable down at the bottom, in the middle, and you start to see some values where it's like, okay, well, we're not going to be able to sell par on this deal, but there's a really good price down here that you can go out and beat other competitors with, at a similar rate. People are going to have to kind of expect to pay some sort of cost, usually, a lot of these, in the current rate environment that we're in.
Yeah, and that's what we've been preaching at Agent Direct too. Let's open up the rate stack. Let's quote at 100 bips, 150 bips in discount, and you're getting the borrower a better deal. Maybe it's hurting your ability to refi them a little bit down the road, but like it's the right thing to do is to give people the good deal today, because we just can't predict the future. So all right, well, this has been it's a tense time in the markets, but I sleep easy knowing that where you've got best pricing in pretty much the entire industry, unless you're going up against some dinky little credit union in your area, and we offer about 100 times more value than they do anyway. So there's not some secret dark MBS market out there that some other lender has access to, that they're out there producing 4s and 5% rates. Like we're on the same level playing field, and we got the advantage. So no use crying over spilt bips is what I have to say about that. Any new investors, lenders, products, any new news out of capital markets?
Yeah, we're working on some stuff behind the scenes right now. I am not going to touch on it too much, but we have a specialty lender that is we have the application out to, and a couple other investors that just got integrated with Arrive. So PennyMac just got integrated with Arrive.
Okay.
So some of those other ones that we're looking to possibly sign up with here in the near future. Kind of a lot of behind the scenes in terms of like making sure that we get approval, that obviously to like get operations trained up. We've got all this 1.62 stuff that's going on right now, and the operations team is doing a great job, and there's a lot of stuff to tackle at that same time. So we'll continue to let them to get everything good to go on that side, and once we kind of get to a good spot, I think, that's when we're going to see some more investors kind of link into that, operations process flow, and it'll be a really good experience for everyone. And it's, hopefully pretty quick and easy to get done. So there's going to be some new ones coming up in the next month or so. But at the end of the day, all that is based off of who's going to be able to execute. Because we know we're a big company. We're producing a lot of volume at this point. Can't just add someone on that's that dinky little credit union like you mentioned, and expect to let them be able to service all of our business, because we have a lot of business nowadays. We need to play with the big guys at the end of the day that are able to execute. So that's the kind of the strategy of how we're doing it. But obviously, there's the specialty ones where we're not going to have 100 million of that kind of production in a month. We're going to have a one or two deals a month that we're just trying to help facilitate you guys have a even bigger product set to work with. So there's two good kind of different things going on in the background.
Love it. Love it. Well, we'll keep an eye out and our little pricing drop down for, and I'm sure we'll get plenty of announcements along the way about these new investors, new lenders, and can't wait to see what you guys continue to iterate and innovate on. Thanks for hopping on today. Appreciate your time. And, everybody, let's go get some loans.
Sounds good. Have a great week, everyone. Thank you.
You guys.